The strength in the market, I think, is absolutely amazing. And whatever has been thrown at both global markets and local markets, you see one day of volatility, one day of downtake, and then it is back to winning ways. So the strength, I think, both locally and globally is extraordinary. Look at Friday's session. And if you map Friday's session on isolation, it was just last week only that budget, in a sense, soured the sentiment, and everyone thought, okay, change in tax structure is going to dampen the spirits of the bulls, but that's not happened. It's a glass half full approach, which is that everybody is focusing on what is good rather than ignoring what is bad. The sheer flow of liquidity on the sidelines is so strong that bulls cannot put a foot wrong. Every decline has been bought into. And the strength with which not only we've seen a sectoral churn, the fact that we are at a new high, it just tells you that how strong the left out feeling is. I mean, forget large decline, even now intraday declines have been bought into. So the strength in the market, I think, is amazing. If you're a trader, you need to be with the strength. I think that the pockets of fresh investment are sliver of the market is offering what could be called as good value. But in this market, if you're in for a long haul, I guess you should be very happy looking at the construct. Similarly, global markets also. I mean, just when it appeared that global markets would hit a fatigue patch, things were getting slightly rusty and toppy after a bad mid-air turbulence. So one bad day last week, global markets have really come back. So it's global comeback, local strength, flows, markets at an all-time high. The setting on the table is looking fine again.
Absolutely. Speaking of the global markets, I think it was a recovery from that oversold sentiment that we witnessed, because on Friday you had the Dow Jones rallying a solid 1.6%, the S&P climbing a comfortable 1%, and that's the Nasdaq as well, wrapping up in the green. You've got the Asia markets as well, that's pretty much open in the green. It's Japan as well that's leading the way. You had the key inflation report as well that seems to have raised hopes of an interest rate cut, and the Fed is expected to hold rates steady, and that we will only know the outcome on Wednesday. But yeah, Nikunj, it was a pretty different picture for one day last week when we were predicting that it would be all gloom and doom, but it looks like it was just a bump around the road.
Yeah, and it's been beautifully negotiated by the bulls. That's the point I just want to stretch further, that it's not only local cues, but it's also global strength, which I think is quite amazing. And the strength and the comeback, what you perhaps have, let's say, seen in Nasdaq and some of the US tech stocks, which did fall post the earnings season, but the force with which they've come back, I think it's quite amazing. So are we in for global stability and more local acceleration? That really may be the case. The ability of this market to ignore bad news, the ability of the market to focus on good news, the flow of liquidity, the feeling of FOMO, the feeling of desperation, I would say all those factors clearly are at play. So yeah, I mean, best of the bulls are saying wow, and that's what I would say after last week's price action.
Right, okay, that's what's been happening across the globe. But guess what? A lot of earnings to digest as well. It hasn't really ended. ICICI Bank, for once, came out with a strong set of numbers over the weekend. Dr. Reddy's as well. It's been a strong set. And for Interglobe Aviation, which, a lot of these HNI fraternity and a lot of market men were really watching out for these numbers, that's been largely in line again, along with expectations clearly. So we've got a strong set of earnings as well to react to this morning.
See, ICICI Bank becomes this consistent one now. I mean, you look at numbers which you've got, let's say, from Axis Bank. And again, if you do both a relative comparison and an absolute comparison, I guess ICICI Bank, in a sense, are now delivering consistently. IndusInd Bank, well, numbers were not that great, but OPEX cost has gone higher, which means they were in line with estimates, but their numbers have not been that consistent. Axis Bank disappointed, and HDFC Bank has their own set of issues. Now, the problem is that ICICI Bank is a over-owned, well-discovered, well-tracked stock. And financials in general are selling because of not because of fundamental factors, because of technical factors, which is FIs are selling, they own banks, and that's where I guess the selling seems to be coming in. Now let's look at ICICI Bank, 1 year comparison with the Bank Nifty, and you will actually see that even though ICICI Bank has been a ranked outperformer, I guess in this kind of an environment, if somebody has to sell, I think ICICI Bank becomes the last port of call which they really want to sell. So it is outperforming the bank nifty quite handsomely, and the more you stretch, you'll realize that it is outperforming every other major bank quite handsomely in the private banking space. So this becomes this go-to stock. Dr. Reddy, impressive set of numbers. The cycle seems to be turning. Things indeed are looking up for them. Indigo has been in performing stock. Now numbers were not expected to be strong, so they are in line with estimates. You don't track a company like Indigo on a quarterly basis to judge. So Indigo is more like a long haul stock when you're buying on the fact that they will gain market share or retain market share, Indians will fly more, efficiency is kicking in, crude is down. So Indigo is not a quarter-on-quarter deal as it is, so nothing changes incrementally there. ICICI Bank is steady, and Dr. Reddy is positively surprised.
Yep, those are all big numbers, a quick earnings roundup as well. But in the meantime, there's also some news with respect to the cement sector. The fact that Ultratech has looked at India Cement's acquisition, the company becoming now a subsidiary as well of Ultratech. That is something as well that we will be flagging off. And in fact, they have a pretty dominant presence as well in the southern region, and 81.5% is what Ultratech will hold post the open offer.
See, the consolidation in the cement space, I think, is obvious, and you can just see that the way Adani Group is moving and the way Birla Group is moving, whichever assets which are efficient assets and which can be turned around, I guess that is evident. Now let's understand the news here. First, at what stake was the stake from Radhakishan Damani acquired by the Birla Group? And then if one looks at the open offer, at what rate the open offer comes in. So the open offer comes at a premium to the basic acquisition price which the Birla Group acquired from Radhakishan Damani, who had 20% ownership there. If one really looks at the combined offer, now that is important. Radhakishan Damani, $190, promoter and open offer now comes it at 121. So when I say promoter, in this case it is Mr. Srinivasan. So the blended price for this deal is going to be north of $100. What is the average in the cement sector for large companies and for regional focused companies? I'm not talking about mid-tier and unlisted companies, because you cannot derive at a premium at a real number there. So what is the EV per ton of for Adani Group, for Ultratech, for Dalmia, and for other companies? And they pretty much are in and around at which the India Cement acquisition would be done. The point I'm trying to make here is that there is enough and more consolidation which is happening in the cement sector. Cement is exactly going the way steel is going. What needs to be seen, and again we'll discuss Ultratech with an analyst as to what it means for Ultratech, but for me the big picture is consolidation is there, two large players are there, and things in a sense are really consolidating there.
If you like this video, then like, share and subscribe to ET Now.